Alright guys, in today's video, I'm going to break down a trading strategy I used in a recent trade. Now, my aim with these videos is basically to walk you through the logic behind my entries so you can understand the setups and hopefully apply them successfully in your own trading. So, let's begin here with a 3-minute chart, which in my view was, I should say, instrumental in terms of identifying the short setup for this trade. As you can see at the center of the chart here, we have this whole section of trading activity that clearly stands out. More importantly, though, I should say that we can observe a decisive shift in bullish momentum take place just below the 410 level here, which is clearly marked by this sequence of strong impulsive demand bars. Now, this 60-point surge effectively, as you can see, broke the price out of this 2-hour consolidation period, signaling, in my view, the initiation of a high-quality setup. Now, when I talk about the initiation of a high-quality setup, I'm referring specifically to this decisive shift. This move was crucial for me because it not only laid the foundation of the setup, but also aligned seamlessly, as you can see, with the formation of an AMD cycle, which clearly follows the Wyckoff schematic, starting here with the accumulation phase, transitioning into the markup phase. This is then followed by the distribution phase, and finally concludes, as it should, with the markdown phase. Obviously, recognizing these phases allowed me to anticipate the completion of the cycle and time my trade accordingly, particularly when the price formed a double top around the 485 area. Another factor contributing, in my opinion, to the setup's high quality was the principle that the market transitions into a new trend during periods of accumulation and distribution. On the distribution side, since this is our case here, we can clearly see the price breaking structure at the 463 level here, signaling the onset of the markdown phase. This dynamic indicates that the market has established a well-defined range here with sufficient structure to infer a short-term bearish bias, as clearly suggested by the ongoing markdown phase. Now here is a key point, guys, that I want to address. The break of structure at the 463 level is not the short signal you should be focusing on. In other words, you shouldn't short here. And the question is clearly why? Well, because while structural breaks are a useful technical concept, they are not foolproof, as everybody knows. In this case, sure, shorting the break up here could have netted around 30 points. But that would have been more of a lucky trade than a strategic one. Guys, you have to understand that for a trade to be high probability, it requires a high quality setup. And high quality setups depend on a confluence of solid factors, not just a single technical event, which, most of the time creates a false impression as to the direction of the real trend. Also, pay close attention to this supply bars long rejection wick here, which clearly provides some valuable data into the market's bias. The reason I'm saying that is because it's clear that market makers want to push north at this point after the price wicks into this large imbalance zone to the left. A similar pattern emerges after this mini rebalancing move, where, as you can see, another rejection wick forms, coincidentally not printing below the 410 support level. There is no question in my mind that these rejection wicks were strong indicators of underlying buying pressure, likely driven by market makers signaling the market's short-term intent to move higher. This is further supported by the presence of these imbalance zones, particularly the one at the 470 level up here, which I do believe acts as a price magnet for market makers due to the significant liquidity it holds. So after identifying the AMD cycle and analyzing the price trend, it's evident that the short-term retracement after the break of structure is nearing completion. This is further supported by, again, this balancing move, the presence of these rejection wicks, and the strong impulsive behavior of the demand bars, which signal a reversal and potential continuation of this upward momentum. Now, guys, take a moment here to consider why beyond the imbalance zone I chose to place my short in this specific area. I mean, is there anything that catches your eye here? The reason lies in the presence of this bearish order block, which served as another layer of confluence, elevating this way the setup solidly to a high probability one. This additional confirmation, coupled with the fact that the order block also qualifies as a supply zone, and this is because, given the impulsive nature of the bearish bar dropping below the block's base, gave me the confidence to take the short position at the 463 level. Now, this level not only aligns with the break-off structure I mentioned earlier, but now represents more than just a single technical event. It has become, I think, a solid part of the overall setup. As you can see, the trade played out as expected, hitting both of my profit targets with minimal drawdown along the way. By the way, guys, if you found this trade analysis helpful, be sure to check out my next video where I'll discuss similar setups and strategies. Alright, gang, thanks for watching, and as always, hope to catch you all in the next one.